So you want to make money fast? Get rich in the stock market overnight? Well, let me show you the perfect strategy. To go broke. If you follow these steps correctly, I guarantee you'll lose all your money in record time. First of all, follow the hype. Did you hear about that one stock everyone is buying? The one that already went up 300%? Quick! Buy it now before it's too late. Oops. Turns out if everyone is already talking about it, you're too late. Moreover, check your portfolio 100 times a day. Real investors don't sit around waiting. No! They check their portfolio every 5 minutes. Refresh, refresh, refresh. Because remember, if you watch your stock long enough, it will go up. Right? Right. Oops, never mind. Last but not least, buy high, sell low. This is the holy grail of bad investing. If a stock is at an all-time high, buy it. If it drops just 5%, sell everything. Because nothing says smart investing like buying expensive and selling cheap. Yeah, let's just ignore that guy. Jokes aside, if you're losing money, it's probably not because of the market. It's because of your mindset. You fear losing more than you want to win. Your brain hates losing more than it loves winning. So you sell too early and regret it later. You think you can time the market. The reality, not even professional traders can predict the market consistently. So what makes you think you can? You follow the crowd. If you're making a trade just because everyone is doing it, you're already too late. So how do you stop losing money? It's actually simple, but not easy. You need to change the way you think about investing. Let's break it down. Have a long-term plan. Stop panic trading. Most investors lose money because they have no plan. They buy impulsively, sell emotionally, and then wonder why they're broke. The market goes up, the market goes down. That's normal, but if you panic every time there's a dip, you're never going to build wealth. Let's take an example. Imagine you invested in the S&P 500 back in 2008, right before the financial crash. The market dropped over 50% in months. Most people sold out of fear. But those who held on, they saw their investment triple over the next decade. Short-term traders were wiped out. Long-term investors, they won big. So the first step is simple. Have a plan before you invest. Set your risk tolerance, your exit strategy, and your time horizon. Stick to it, no matter what. Don't chase hype. Invest in what you understand. Most people lose money not because they invest in bad stocks, but because they don't even know what they're investing in. Remember GameStop, Dogecoin? Everyone was saying, buy now or miss out. And what happened? Prices skyrocketed, then collapsed. And the people who got in late, they lost everything. Smart investors don't FOMO into hype. They do research. They understand the fundamentals of a company before investing. But how do you do that? Here's a simple rule. If you can't explain in one sentence why you're investing in something, you shouldn't buy it. Ask yourself, what does this company do? How does it make money? Why will it still be here in 10 years? Let's take Warren Buffett as an example. He never invests in businesses he doesn't understand. That's why he stayed away from Bitcoin, meme stocks, and speculative assets. And yet, he's one of the richest men alive. Instead of chasing hype, find solid companies with real value. Look at earnings, debt, cash flow, and long-term trends. If you focus on that, you'll be ahead of 90% of investors. Understand that losses are part of the game. Accept them and move on. Here's a harsh truth. You will lose money at some point. That's just part of investing. Even the best investors in the world lose money. Warren Buffett lost billions on bad investments. Ray Dalio made huge mistakes in the early years of his career. But the difference between great investors and broke investors is how they handle losses. Great investors learn from their mistakes, adapt, and keep going. Broke investors, they panic, quit, and never come back. Here's a real example. Jeff Bezos once lost $170 billion in Amazon's worst year. Did he quit? No, he kept building. And now Amazon is one of the most valuable companies in the world. If you can't handle losing money, you have no business investing. The key is to accept losses as part of the journey, analyze your mistakes, and move on. So let's recap. If you want to stop losing money, have a plan, stop chasing hype, and accept losses as part of the process. What's the biggest mistake you've made in investing? Comment below and let's talk about it. And if you want to stop being a dumb investor, hit that subscribe button. See you in the next video.